In this presentation, we will discuss options for creating invoices and tracking accounts receivable within our bookkeeping system. For more accounting information and accounting courses, visit our website at accountinginstruction.info. The bookkeeping system we have set up here is a cash-basis system, so we don't typically track the accounts receivable within a cash-based system. However, it's often the case that business owners want to use the QuickBooks system in order to create invoices, and that's very common. Sometimes you'll see QuickBooks being used just to create the invoices and make the invoices, and other times you'll have QuickBooks wanting to be used to track the accounts receivable. So in other words, it's possible that we have a client that wants to use QuickBooks for help with templates to make the bills that they create, the invoices, and or possible for them to want us to actually use it to track accounts receivable. One option is to create the invoices outside of the QuickBooks system. In other words, if the main goal is just to create the invoices, then there's other formats that we can help the client to use in order to create the invoices. For example, we might use Word documents or Excel templates. There's going to be pre-formatted templates that we could put together and format in order to make invoices and be able to send those invoices out. And our goal then would be basically to have the customer send the invoices out, make the invoices, and actually would have to track the accounts receivable in something like an Excel document or just writing down the invoices, because when we get the invoices, we're not entering the invoices or tracking accounts receivable. We're only recording cash or income or revenue when it clears the bank. So we're waiting until it clears the bank under this bookkeeping system. So we're not seeing any revenue until it clears the bank, which means we're not entering the invoices, we're not tracking the accounts receivable, we're just entering the actual deposit and recording the income at that point in time. Depends on the type of industry as to when revenue would be created. Some industries may not need the invoicing at all. If we're talking about something like a food truck or something like that, they're going to get paid at the same point in time, probably don't need to send invoices. But if we're talking about some other type of businesses that have service businesses, it might be the case that we have invoices in that process. And then the question is, how do we want to track that invoices if we have this simplified method? Another method we could use, if they want to use QuickBooks, because we could put in items in QuickBooks and it could make it a little bit easier to create invoices. Like I say, QuickBooks sometimes is used by some clients, they just use it basically to make the invoices and make the invoices creation very easy. So in order to set that up, it's possible that a client could actually purchase QuickBooks. We can't really give them our version of QuickBooks or use the same version of QuickBooks because we have the desktop version. So we can't let them use our QuickBooks in order to create the invoices. It is possible for us to make the invoices, however. And so if we had certain types of invoices that our client would like to create, such as our client, if we have selling guitars and they have guitar lessons, they might say, hey, I'm pretty good at doing the guitar lessons and whatnot, but when I actually bill the client for equipment and things like that, I would like to have a more formal invoice process. And maybe we can then set up a system with that type of client to make the invoices. Now, our options, if that were the case, if we're going to do something like that, would be one, let's make the invoices outside of the QuickBooks system, again, making another QuickBooks file just to create invoices. And by doing that, we'll have the QuickBooks file that we're making the books from that will be on a cash basis. And then we'll have another QuickBooks file, which is free to just make another file that we could just use to create the invoices if that's all we need to do, if that's all we're needing from us, and or to try to help track the invoices as well. We can at least give a list of the invoices that have been sent out at a given point in time to help the customer to track the outstanding invoices. What we will have a bit more difficulty doing is matching up the payments that have been received to the invoices that are outstanding. And the reason is because all we're going to get is the bank statement under our system and as far as deposits. So the only thing we have to match up as to whether we got paid for a particular invoice is going to be the dollar amount. So if the dollar amount for the payments on the bank statement are always the same as the invoice, then it would be possible for us to kind of match them up. But oftentimes when we have deposits, a client will deposit them like multiple checks at one time, and so therefore the deposits won't always line up. So we probably do not want to get into the case trying to guess when the deposit is, because we're not actually receiving the checks. We don't really know who the deposits come from. Now, if we got bank deposits or electronic deposits, it might be easier to match that up. But the whole goal of our system here is to be on a cash basis and not have to deal with that matching up. And it could be a little tricky to do that the way we set up the system. So if all we need is to create the invoice and possibly give some reports saying, hey, these are people that owe you money as of this point in time, we're not giving reports telling you when they got paid, because all we're doing is recording the payments received as income at the point of receipt in the actual bookkeeping statement. But you can take a look at these and keep your own records, again, kind of outside of the cash basis bookkeeping system in terms of the accounts receivable. That's another option we can have. And the third option is to do more of a full service bookkeeping with regard to accounts receivable. And that would be us actually entering the accounts receivable into the QuickBooks system, and by making the invoices within the QuickBooks system, and then making sure once we do that, we'll have to be able to match up the payments that we see on the bank statement to the invoices we have. So it's a little bit more tricky when we do this process, because we can't just say that all deposits then are going to go to revenue. We have to match out those deposits that should be going to accounts receivable. So this method we don't really want to take on under our cash basis system unless we feel pretty comfortable and confident to do that. Because if we start entering invoices into the same system in which we are on a cash basis, just recording revenue as we get it, as it deposits into the bank, then we're going to end up in situations where we record revenue 2 times and we're not matching things up. So you want to be very careful not to enter invoices into your cash basis bookkeeping system unless we're veering away from that very consciously to a more of an accrual basis system, at least with regard to accounts receivable. For more accounting information and accounting courses, visit our website at accountinginstruction.info.